Let's talk about the CMA, the Certified Management Accountant. This one sounds bossy.
It is a bit bossy. The CMA is the strategic manager. The certification appeared because management needed something more than just compliance or reporting.
They needed more than just the history books.
Right. They needed help planning. They needed help making decisions. They needed help analyzing costs to figure out if a product is actually profitable.
So less about did we record this correctly and more about what do we do next?
Precisely. The focus is on strategic financial management and performance evaluation. It's about looking forward, not just looking back at the ledger.
So it's about turning numbers into a plan.
Into a battle plan. A CMA asks, if we drop the price by 10%, will the volume increase enough to cover the loss in margin? That's not a compliance question, that's a strategy question.
Now, this brings us to a really critical point in the EduKnit source material. There is a specific warning here, and I want to highlight it because it feels like a trap that a lot of young professionals fall into. I've seen this happen.
It is a massive trap. The experience warning. This is critical advice, and if you're early in your career, please listen closely to this part.
The source advises that young professionals, let's say those with 0 to 10 years of experience, shouldn't rush into the CMA if they lack core accounting basics.
Don't do it.
Why is that? Why not jump straight to the strategy part? Strategy is cooler.
Strategy is cooler, yes. Everyone wants to be the strategist. But here is the reality check from EduKnit. In the first decade of your career, you need the daily grind skills.
Just daily grind.
You need to know how to handle invoices. You need to know how to do bank reconciliations. You need to understand daily financial treatments. You need to know what happens when a debit meets a credit.
Right. You can't just theorize about costs if you don't know how costs are actually recorded in the first place.
Exactly. Imagine a junior employee, fresh out of university, walking into a board meeting at age 22, slamming their hand on the table, and telling the CEO to pivot the strategy because they calculated a ratio.
Listen up, folks. I've got a CMA and I think we should buy our competitor.
Exactly. They'd laugh you out of the room.
Right.
Not because you're wrong, but because you haven't earned the stripes. In those early years, you were going to be asked to record transactions, prepare reports, and fix errors.
You're in the trenches.
The ACCA provides that deep dive into daily reporting and standards needed early on. The CMA is fantastic, but it is for when you are ready to aid in decision-making. If you skip the basics of how the numbers are made, you can't effectively manage based on those numbers later.
That makes so much sense. It's like trying to be a head chef without knowing how to chop an onion.
Perfect analogy.
You might understand flavor profiles, but you can't work the line.
Perfect analogy. Don't skip the chopping phase. You need to earn the right to be strategic. You need to know where the data comes from before you can tell people what to do with it.
Okay, so that's the accounting landscape. We have the guardians, the CPA, the corporate executors, the ACCA, and the strategists, the CMA. They are all part of the accounting family.
Right.